Good morning and welcome to Rising. We have a great show for you today. Liz, welcome back to Rising. It's good to be sitting here with you.
Good to be here. Like I mentioned yesterday, I'm filling in for Robbie, who will be back with you all tomorrow. Today we're going to talk about the WHO's decision to investigate the origin of the pandemic further, after they admitted that the lab leak theory needs a little more looking into. But first, U.S. stock futures moved slightly higher today, following a plunge that sent the Dow into its lowest point since January 2021 as inflation and rising interest rates spark worries of a recession.
Every stock in the S&P 500 went into the red, and some analysts say the market has lost over $10 trillion in value since the beginning of the year. Even crypto tanked amid the mess. Business Insider's Matthew Fox joins us now to make sense of what happened and what we can expect to see in the future. Welcome, Matthew. Thank you for joining us.
Hey, Bree. Hey, Liz. Thanks for having me.
So, Matthew, a lot of blame is being thrown around. There are obviously people on the right who are attributing everything that happens on Joe Biden's watch to Joe Biden, perhaps rightly or wrongly. There are people who are taking the longer view, saying that many of the things that happen in the economy aren't within the direct control of the current administration. To what do you attribute the recent stock failures?
I think a lot of the recent decline is it's all about Friday's CPI inflation report. So a lot of investors and analysts were expecting that report on Friday to show finally a deceleration in rising prices. And we didn't get that. Instead, we got signs that inflation is still hot and it could still continue on longer. So we're in a weird dynamic where now the Fed really has to combat that rising inflation with higher interest rates. And we got a pretty big signal yesterday that they're going to raise interest rates by 75 basis points tomorrow instead of the expected 50. So I think that's what really sent the market into a tailspin yesterday.
There's been a really interesting narrative that sort of coursed through a lot of parts of the left, and we actually saw the New York Times morning newsletter today do a really good job of sort of debunking some of this. But the narrative is basically that, we're seeing extremely high, record high corporate profits, and really this is an example of price gouging or of big corporations raising their prices significantly, and that's why Americans are really feeling the burn in their pocketbooks. What do you make of this, and do you have any words for people who sort of spread that type of theory?
When input prices rise, there usually is some room for corporations to eke out a little bit more profit by, if inputs rise 2%, usually they could get away with a 2.5%, 3% price increase. I think a lot of the supply chains have been completely exacerbated during the pandemic, during 2021, spilling over into 2022. So personally, I think it's probably a little disingenuous to blame this all on corporations and price gouging. I mean, this is all set by supply and demand at the end of the day. It's economics 101. I'm sure there are some instances where some companies are taking more advantage of consumers than others, but to cast such a wide blanket with that type of rationale probably doesn't hold water when you dig a little bit deeper into it.
Yeah, Matthew, I think the reality is that most people would agree with you. Even people who are pointing to price gouging certainly aren't arguing that it's all price gouging. That kind of maximalist argument, I think, can obscure the reality that, to your point, obviously corporations frequently, and in this case, are taking advantage of the supply chain issues to eke out a little bit more profit at the top. But what's concerning to me is that there isn't more of a conversation about the fact that at the end of the day, a lot of these supply issues are still the result of COVID era issues, whether it's the oil refinery shutting down under COVID and having a long tail and opening back up, or refusing to open back up because they don't see long-term profits anymore as the world is forced out of using oil as a primary energy source just by the realities of the world, not because of any Green New Deal policy or anything like that. And if that's the case, if we're still dealing with the consequences of COVID, of supply from China not coming in, of the shipping dock backlogs, the fact that we've had decades of industrial policy where we've moved manufacturing overseas, that we don't have the storage capacity to hold things like baby formula stateside the way we used to do. What should the Biden campaign and Republicans in Congress be advocating for to address those root causes?
industry by industry, there are so many different factors, but the main driving factor behind all of these higher prices across many industries is oil prices. So I think that is probably the number one thing to tackle. I mean, China is still experiencing rolling lockdowns, which is going to continue to hamper the supply chain. We can't control that. That's China's policy. But when it comes to energy, you have to realize that oil companies, since about 2014, overinvested in fracking in the Permian Basin and all this domestic shale energy production. And because of all that overinvestment, they were rewarded with falling stock prices for literally almost 7 years. So I think the executives behind those companies have been conditioned to think, hey, what's the point of us trying to overinvest to try to boost production when it's only going to lower prices and hurt our bottom line? So it's a delicate balance. I think I follow markets more than I do politics, because you can't really do both, or you lose your mind. But I have to think that some of the expectations that we're going to, immediately transition to green energy is just not realistic. It's going to take a couple decades to get to a full, green energy grid. So I think the Biden administration probably has to warm up a little bit to working with these energy producers, maybe have a roundtable meeting and really advocate for them to start investing again. But when you hear a lot about, talk about them taxing windfall profits, Exxon making more money than God, Apple made more money than all the oil companies combined last year. So I think
I appreciate
Biden,
the realism here. Absolutely.
If only it was Apple backlogs that were causing the economy to collapse, as opposed to these energy issues. But I take your point. But part of the issue is that Biden has, to his credit, said let's get these refineries open, and it is the profit motive that is disincentivizing people. To your point, like what you said, it doesn't advantage these companies from a strict profit perspective to start refining American gas again, right? So that's a place where some people on the left would say, okay, well, if the profit incentive isn't aligning with what's best for the American people, this is exactly where government should step in. But let me not force you to keep talking politics. Let me ask you back about the stock market. Biden once touted the stock market for hitting record after record on my watch. That's a quote. And when asked about Wall Street's losses under the administration, the press secretary explained that the president is aware of the situation and, of course, blamed Putin's price hike. Let's watch.
All the gains from President Biden's time in office have been wiped out.
So, as you know, we're watching closely. We know families are concerned about inflation in the stock market. That is something that the president is really aware of. And so, look, we face global challenges. We've talked about this. We're not the only country dealing with what we're seeing at the moment as it relates to inflation. Putin's price hike, inflation, coming out of a once in a generation global pandemic. All of those things play a factor.
So President Biden has made it clear he's putting inflation in the hands of the Fed, who continue to raise interest rates on Americans to balance out the central bank. But as our friends over at the Lever note, Powell has stated that his goal is to get wages down and limit business hiring demand. This comes as household wealth has taken a hit for the first time in 2 years.
And we're learning that credit card debt in the U.S. has hit an all-time high of $1.1 trillion. How can you explain that raising interest rates works to combat inflation when we see trends like these?
Well, the labor market is incredibly tight. For every unemployed person in America searching for a job, there's 1.9 job openings. So Powell's trying to reduce the tightness of that labor market to help put pressure on wage inflation, because wage inflation is one of the most stickiest parts of inflation. Once it's just a matter of fact. So Powell can't control the supply chain issues that are driving the bulk of the inflation, but the one thing he can control is the wage side to some extent by trying to cool down the labor market. So it's really one of the only tools Powell has to combat inflation.
Absolutely. And I mean, Powell is not a man who has really covered himself in glory. We've seen so many different Biden administration operatives, calling inflation transitory. We saw that from Biden himself. We saw that from Jen Psaki. We saw that from Janet Yellen. We saw that from Powell. And it's very interesting watching them attempt to sort of figure out how to better communicate that to the American people, who very much feel like when we've reached 8.6% year over year inflation, it doesn't really feel all that transitory. And they're very much looking for a longer term fix.
Yeah, I mean, at the end of the day, I think the Ukraine-Russia war really caught everyone off guard. I think you could have made quite a compelling case pre that invasion that inflation probably would be transitory and that inflation probably would cool down over a period of months, if not a year, year and a half. But Russia's invasion of Ukraine kind of threw a wrench into everything. That's why we've seen oil prices literally almost double since that invasion. So that has just added so much extra pressure that unless you were a geopolitical expert rather than an economist, you probably wouldn't have been able to predict.
Yeah, Powell, nominated by Donald Trump in 2017, is not exactly a friend to the left. And I think one of the points that is being made in the Lever piece is, wages have not kept up with inflation. The inflation that we're talking about that's been so problematic and on the rise is not wage inflation. In fact, a main concern of many populists in this country has been the fact that we haven't had a minimum wage raise for the longest period of time in American history, since the minimum wage was founded, I think, in 1938, and that so many people are struggling with housing costs, with food costs, with all of these other inflationary costs because wages have not, in fact, gone up. So can you help viewers to understand why the cure to this problem is trying to depress wages in the labor market, as opposed to curbing some of the other kinds of spending, including the large aggregations of wealth at the very top, as we've seen both corporate profits and the individual profits of the very wealthy rise over the course of this pandemic and economic crisis?
I'd have to agree with you. I think my first job was in 2004 or 5, and I think the minimum wage is like 20 cents higher than that is today, than it was back then. It is insane, and it does make sense that wages should be on the rise. So Powell is it's a delicate balance. I mean, at the end of the day, he wants wages to rise, especially for the bottom half. Call it even the bottom 90% of the country's population, just given how extreme the wealth inequality is. But I would say one thing about the Fed is their words. Their words are ammunition. So they're able to try to talk down the market in an attempt to kind of level out the playing fields, which isn't the best way to frame it. But the stock market is down 20%. The NASDAQ's down 30%. Who owns the most stocks in this country? It's the top 10% of Americans. So while
they're taking the biggest beating, right?
So they're taking the biggest hit right now. Obviously, they still have a lot of wealth, so they're not, we shouldn't feel sorry for them. But at the end of the day, I think about 50% of Americans own wealth, 50% of Americans have an interest in the stock market, but it's really concentrated in the top 10% of the wealthiest people in America. So to some extent, I don't think Powell's that concerned about the current stock market decline, because it helps rein in the wealth effects, and it helps, it kind of helps even out some of the wealth inequality we've seen build up over the past, 10, 15, 20 plus years, even longer.
Well, thank you so much for joining us today, Matthew.
Thanks, Bree. Thanks, Liz.
And Liz, I look forward to hearing what's on your radar up next.